Happy Friday, Chris here. Today I wanted to show you what's going on with interest rate trends, and that's super hard to do unless you can see them yourself. So here we go. We are looking at the 10-year Treasury yield, or the interest rate on a 10-year Treasury bond. That's, of course, the gold standard. That's what mortgages are primarily based upon, is the 10-year Treasury. So when the 10-year Treasury goes up, guess what? Mortgages go up as well. And these green vertical lines, those are what we call candlesticks, and each one represents a day. So we got 1, 2, 3, 4, 5 days in a row of interest rates going the wrong direction. Ouch. A little bit of good news. The last time we had 5 days in a row of interest rates going the wrong direction, we did have interest rates fall shortly after. Fingers crossed that will happen again. But the long-term trends are still intact despite what's going on here. So now we've zoomed out. Now we're looking at all the way back to 2023 till now. But more specifically, from late 2023 through now, we see kind of a distinct long-term trend. And I do expect this trend to continue. I always tell people when the Fed cuts interest rates, they cut interest rates in a straight line. It goes straight down. But interest rates on mortgages, 10-year treasuries, they do not go down in a straight line. They go down super zigzaggy. And this is exactly what I'm talking about here. So now, as far as what's going on with the Fed, well, they're meeting next week, highly anticipated. Hopefully, we don't have what happened last time, right? Last time the Fed started cutting rates, well, that was back here in September, and mortgages and treasuries went up, right? So now we're expecting a 99% chance the Fed is going to cut rates this coming up week. So that is welcome news. However, it's the dynamics and the rhetoric and the speeches that come out of the Fed meeting that are really going to be driving the mortgage market. So mortgages, at the end of the day, we're not in a super sexy spot here. We've seen this right here, September. This is when interest rates were right around 6%. We saw them go up to 7 1/8. This right here is, let me scroll down just a tiny bit. But that right there is November. They went down. We kind of got some 6.6s earlier this week, but now shot right back up to what we have today. National average, 20% down, good credit at 6.95. So if you have any questions about financing a home, you have any question about nerdy chart stuff, give us a call. Let us know. Happy Friday.